Today on Fear and Greed, major changes in the Australian retailing landscape as Myer buys several well-known brands and Rivers announces it will close. The on-time performance of local airlines improves but remains below pre-COVID levels, and Australians' wellbeing hits a low. Plus, Donald Trump gives his first TV interview since his inauguration, doubling down on immigration. And the Albanese government puts $2 billion into its green bank. Welcome to Fear and Greed Daily Business News. For people who make their own decisions, it is Friday, the 24th of January, 2025. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning. Particularly excited this morning, Michael. Do you know why?
I genuinely don't.
Lead story that's not Donald Trump.
Oh, yes.
First time all week.
That's quite extraordinary that that there's something going on in the world that isn't Donald Trump now.
We had to look under a few rocks.
Indeed, but you found a good story. It's about the shake-up that is underway in the local retailing sector, with shareholders overwhelmingly backing the takeover of Premier's apparel brands and the closure as well of a well-known fashion brand.
Yeah, so let's talk about Myer first. Myer taking over Premier's apparel brands. It means that billionaire Solomon Lew, perhaps Australia's best-known retailer, certainly one of the best retailers this country's produced, he'll get a seat on the Myer board. That's because he'll hold 27% of the new company. The 124-year-old department store has just added Just Jeans, Dotti, Portman's, JJ's and Jackie E to its stable. New company will have 783 large format stores and specialty stores, 17,000 staff, $4 billion in earnings, $4 billion in revenue, in sales, and $250 million in earnings. The share prices of both companies, Myer and Premier, have fallen in recent weeks, and that's on the back of poor pre-Christmas sales. Yesterday, Myer was up more than 5%. Premier was down slightly, so it's easy to see who investors think the deal is best for. In any case, we have, as of, well, I don't know that the paperwork's gone through yet, Michael, but, more or less as of today, a new major retailing behemoth.
Oh, wow. Really kind of laying it on thick there, Sean. But that is big. That is actually big. 783 stores. And obviously the large format stores are in the minority within that. The majority of those are kind of specialty stores because the number of Just Jeans and Portman's and JJ's and things that you would find in shopping centres outweigh the kind of the individual Myer stores. But still, it's a big retail footprint.
And 17,000 staff. That's a lot of people with a job.
Yeah, it certainly is. That's a good news story. Not so good, Sean, the second part of this, all 136 Rivers stores across the country will close in mid-April after the receivers for the parent company, Mosaic Brands, couldn't find a buyer for the retailer.
Yes, that means 650 jobs will go. Rivers actually has a deep history in Australia, not so much in retailing, but in manufacturing. It actually started selling goods back in 1979 to stores such as Grace Brothers and David Jones, but its roots actually go back to 1863 when it started making shoes and wholesaling those shoes. The first Rivers retail store opened in 1983 in Sydney. That was selling footwear back then. However, Rivers will be no more. It is the seventh Mosaic brand to go under. We've lost Rockman's, Autograph, Crossroads, W Lane, B-Me, Katie's, and now Rivers. They're still trying to find a buyer for the two remaining retailers that look to have a future, Miller's and Nonny B. I don't like to be too negative about or too kind of dancing on the grave here. One thing about the Rivers, they did say yesterday there's going to be massive sales in Rivers stores ahead of the closure in April. So if you are, they said it, not me. So if you are a fan of Rivers clothes, now's the time to buy it.
That is a bit grim, isn't it? The thing is about Rivers, they've always been at a very low price point anyway.
Yeah, and often you see them in country. So I grew up in Orange in New South Wales, as you know. Rivers is a big store in that town, and that town had a Myer department store which closed a few years ago. And so stores like Rivers really make a big difference. So some of those country towns will really feel this. Mosaic Brands overall, it collapsed last year, owing $249 million.
Wow. And now Moving away from retail, Sean, to politics, the Albanese government has put an extra $2 billion into its green bank to boost momentum in clean energy investment, notwithstanding the shift away from renewables in the US. It'd be hard to kind of commit this kind of money when you look to the world leader and it's pulling back. It's like, okay, all right. It feels hard as though anything you do is just a drop in the ocean.
Yes, although Anthony Albanese in the last couple of days has hinted at the opportunity because the US is pulling out of many of the renewable energy projects and the Inflation Reduction Act. They say about $700 or $800 billion worth of spending in that will be pulled back. And so there is opportunities for countries like Australia. The extra funding announced yesterday is the first for the Clean Energy Finance Corporation's General Purpose Fund since the organisation was set up in 2012 with $10 billion from the then Labor government. The Clean Energy Finance Corporation's total investment capacity now, so all the money they've put in, all the investment returns all over the years, is about $30 billion, a bit over $30 billion. There's also specific investment funds overseen by the organisation, so the $19.5 billion Rewiring the Nation Fund for Electricity Transmissions, that's all the poles and wires that the government's putting up. So this organisation is overseeing that one. Prime Minister Anthony Albanese said the extra money would unlock about $6 billion of private investment in energy transition projects.
All right, a big non-Trump start to the show.
Yeah,
show there, Sean.
But fear not, there's plenty of Donald coming.
There certainly is. We've got a lot still to discuss, a lot in other spaces as well. We're talking about kind of why our government, the federal government, is paying another $50 million to Regional Express, the airline. We're talking about Australia's kind of national wellbeing, why that's at a record low. We'll be back in a moment with the rest of the day's business news. Sean, the federal government will pay Regional Express another $50 million to keep operating in rural Australia, taking the total amount of taxpayer funding since its collapse to $130 million.
So the administrators of Rex, which is EY, said that the company would be wound up if not for those cash injections. The administrators are very pessimistic about finding a buyer for the airline. The $50 million announced yesterday will go to PAG Asia Pacific. I'll say that again. The $50 million announced yesterday will go to PAG Asia Capital. That's PAG, PAG Asia Capital, a private equity group. It is the biggest financial backer of Rex. They'll receive that $50 million payment. That means that Canberra becomes the biggest creditor to Rex. The benefit there is it gives the government more say over where the airline will fly and whether or not it should fly. The airline collapsed in July last year after attempting to expand into ultra-competitive capital city routes, think Brisbane, Sydney, Melbourne. Those services have ended and the company's continued to fly its regional routes while run by EY.
The government really doesn't have a choice here, does it? It has to keep on doing this because Rex plays such a vital role in rural and regional Australia.
Totally. And if there's an election coming up in May and the government did not put money into it, they would have no chance in a regional seat. Full stop.
Goodness me, you're a cynic, aren't you? You went straight to the political angle on this one, Sean.
Realist, Michael.
I'm an idealist. So that's the two of us, the realist and the idealist. Here we go. Now, while we're talking airlines, local airlines on-time statistics are improving, but they still remain below pre-COVID levels as a lack of new aircraft hampers efforts to meet demand.
So on-time arrivals in 2024, Qantas 75%, Jetstar 73%, Virgin 72%. Those numbers were inflated a bit by a really good middle part of the year. They actually came off towards the end of the year. The long-term average is about 80%, according to the Bureau of Infrastructure and Transport Research Economics. So we are still below the long-term average and we are still below the pre-COVID level. Much better, though, than 2022 and 2023. They were disaster years, really, as the airlines got back, trying to get back capacity. They got back to domestic capacity or pre-COVID domestic capacity. We're still on the way in terms of international capacity. Short answer to all this, there's just still not enough aircraft in the sky. They were run down during COVID. Now, in Qantas's case, its fleet is particularly old. It's got an average age of nearly 16 years, according to a group called Cirium. It is the third oldest fleet of major global airlines. So we're talking 16 years. Singapore Airlines fleet is less than 8 years old. Big difference. It's all about the reason for that is an underinvestment in planes the previous decade. Alan Joyce turned down buying a bunch of well-priced Dreamliner 787s during his tenure. One of the big criticisms of Alan Joyce is that he didn't do enough capital expenditure, didn't put enough money into getting planes delivered. If he had, those planes would be online now and we wouldn't have some of these issues. The other thing, Michael, just quickly, ticket prices in December, they were 6% lower than a year earlier. So that's some good news.
Yeah, a little bit of good news there, Sean. Not so good news is this next story. And we've mentioned this at the top of the show. The National Australia Bank Wellbeing Index is back to record lows, reflecting growing anxiety in parts of the population and lower life satisfaction. What are we so anxious about? I would assume it's money, cost of living pressures, all that kind of thing.
Yes, it is. So the big financial stress is one of the big drivers of well-being. NAB has been doing this survey for more than 10 years. It's a quarterly survey. What it found, the headline out of yesterday's results, were that Australians were becoming less patient, less polite, and less kind.
Oh, that's disappointing.
I don't know, Michael.
Oh, okay. I'm guessing they interviewed you for this survey, did they, Sean?
No, not at all. Not at all.
Okay.
Now, the financial concerns are growing, particularly among 30 to 49-year-olds and among younger people as well. It just seems that all the hurt in the past couple of years, the post-COVID years, particularly around finance, has been really hard to overcome. And so no one's overly upbeat about the future. The survey explores how Australians feel about their lives in response to changing economic and social conditions, as well as personal finance. It's an interesting concept. The vibe of the economy is how National Australia Bank put it. It really does matter because if you feel better about stuff, quite apart from the actual data, you tend to get better economic growth. Now, NAB has been tracking this since 2013 and the December quarter was an equal survey low. In NAB's words, many Australians are fatigued by enduring economic uncertainty and lack of a clear vision for a better future. And this is translated into how they feel more broadly about the quality of their lives.
That's not going to improve anytime soon, then, is it? I'm just thinking, of course, about an election campaign, which is always defined by uncertainty. And that's why kind of businesses just put everything on pause during an election campaign because everything is uncertain. So we've got at least another kind of 3 months of uncertainty ahead of us.
One big caveat to that, if we got an interest rate cut in February.
Good point.
People would feel a lot better.
That would be a big boost to spirits.
Yep.
Local markets, Sean, how did they perform yesterday?
The local share market fell just over 0.5%, finished at 8,379 points. The Donald Trump commentary on tariffs isn't really helping. He's talked about tariffs on Mexico and Canada from February 1, China from February 1. He also threw the European Union into it, that one as well. Overall, battery metals companies struggled yesterday, as did the big miners. The retailers didn't do so well. All the big banks were lower. In corporate news, Netwealth posted record net inflows in the December quarter as the company rolled out a series of technology improvements. Its share price jumped, and Bain Capital upped its offer for Insignia, matching the $4.60 per share offer put by rival bidder CC Capital. Insignia's share price has doubled since September last year.
And international markets here, Sean, can you do this without too many mentions of the new president?
Yep. Oil prices continue to head south. Bitcoin's down to $102,000 a unit. Actually, back to oil prices.
Yeah.
What's exciting there, right? NRMA came out yesterday. Well, it's not exciting. It's cautionary. NRMA came out yesterday.
That's very different, Sean.
And they basically said, fill up your car now. So you've probably only got about 8 hours to do it. Because in Sydney, at least, petrol prices are on the rise. And the average price of unleaded petrol in that city was $1.84 per litre. It's going to hit $2 per litre. So if you haven't filled up and you're about to travel, fill up, according to an NRMA. We are talking about international markets. Talking about the Sydney petrol market is anything but international. Let's go back. Bank of Japan, the central bank's meeting today, expected to lift rates today. that economy finally is recovering. It's still the world's third largest economy behind the US and China. It's still a really big player, especially for Australia, where we sell a lot of stuff like coal too. So good news in terms of the economy picking up. When we were talking about lifting interest rates, we're talking about lifting them from very, very low levels. Gold prices hit their highest level since October last year, and the Aussie dollar is trading just under 63 US cents.
You made it the whole way through without mentioning the US president. I will now mention the US president.
Please do.
Sean, because our interview coming up after the show is a terrific look at the companies in the US that are affected by the inauguration of Donald Trump. And you're speaking to Josh Gilbert from eToro.
Sure am. We go through companies like Meta, Alphabet, Nvidia, Apple, Tesla, obviously Elon Musk. What does Donald Trump's election mean for those stocks specifically? It is a fascinating chat.
Yeah. And of course, they all have one thing in common, and that their leaders or their founders were all front and center at the inauguration of Donald Trump. So there's great proximity to the president. And so that I found that really interesting that in that conversation, because Josh is very upfront about his views on what that means for each of these companies and what it means then for investors. So stick around for that one. Sean, one last one before we get to international news. The Australian Securities Exchange, the ASX, the company itself, right, has explained why the market went down on the Friday before Christmas. It was the first time in its history that all batches of trades couldn't be completed.
Yeah, so CEO Helen Lofthouse said it was a highly irregular incident. Given it's never happened before, I'd say that is a definition of highly irregular. And the ASX Limited will provide $1 million in goodwill payments to stockbrokers who used the system known as CHESS and were disadvantaged on that Friday. The problem, there wasn't enough computer memory allocated to settle trades on that day. Interestingly, it was a bug in the system, effectively, that had been there since the system was introduced in 2014. It's been lurking in the system for years, hit on that day. The Australian Securities and Investments Commission boss Joe Longo yesterday told the AFR that the ASX Limited could face new regulatory action as a result. Now, it's already facing scrutiny over failure to replace that CHESS system in recent years and bungled that one as well. So, plenty going on for the ASX Limited.
All right, turning to international news now. Donald Trump had his first sit-down interview with a TV station as second-time president yesterday. The interviewer was longtime supporter Sean Hannity from Fox. It was a relatively tame affair, you would say.
Well, they agreed with each other. There was one moment where Sean Hannity tried to interrupt Donald Trump, who was off on a tangent, and the president didn't like that. But otherwise, he kind of went through his normal critical of Joe Biden and Joe Biden's pardons. He bemoaned what he called were the disasters under the previous president. He is worried about migrants coming to Australia. He said the ones with tattoos all over could be trouble.
That is fantastic.
Who knows? During the day yesterday, Trump signalled a tougher stance on Russia, demanding President Vladimir Putin come to the table to make a peace deal or risk more US sanctions. Of course, he said he would finish that war within 24 hours of taking office. Hasn't quite managed that. He also warned that he might cut federal funding for states that operate sanctuary cities for undocumented migrants. So he's very much doubled down on the idea that undocumented migrants need to leave the country, and he's threatening organisations who hide them, who don't seek them out, to send them home.
And his richest supporter, Elon Musk, doesn't like the only major spending initiative that's been announced so far, the $500 billion Stargate project to build infrastructure for AI.
So Donald Trump, when he announced it, called it a monumental undertaking and resounding declaration of confidence in America's potential under a new president. Musk wrote on X, they don't have the money, talking about the contributors to the project. OpenAI's chief executive, Sam Altman, is part of a team that made that initial announcement with Trump. OpenAI are putting some of the money into it. Altman came out and said Musk was wrong. The Tesla boss then called Stargate fake and Altman a swindler. Now, a very unusual move for a White House official, which Elon Musk is, to poke holes in the administration's policy, at least publicly, particularly on about day 3. You just feel that this friendship is going to have some rough patches.
It's going to sour pretty quickly. You're thinking, and Sean, when it happens, God, it's going to be spectacular, isn't it?
I know. Everyone's waiting for
it. Considering both of them own social media networks as well, because you've got Truth Social and you've got X, and it's just going to be, whoa. Something else altogether. One last one. Quick one, Sean. New Zealanders are leaving New Zealand in record numbers as the country's economy remains in recession.
That's right. In the 12 months to November 2024, a record number of Kiwis left the nation, 127,800. Well, that was the number of people that left, but more than 50% of those were New Zealand citizens. New Zealand's got a population of $5.3 million, but its economy has really struggled on the back of very high interest rates.
Okay, up next is the Fear and Greed Daily interview. We mentioned it before. You're speaking to Josh Gilbert from eToro. Definitely a good one for investors to have a listen to. It is coming up in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And stick around for midday as well. Today, there's a new episode of Ask Fear and Greed where we answer listener questions. Thank you very much, Sean.
Thank you, Michael.
It is Friday, the 24th of January, 2025. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.